Test, test, 1, 2. Here we are again. Welcome back, beautiful people. If you can hear me or see me, leave a comment in the chat, say hello, and subscribe to the channel. Thank you so much, FunderPro, for having me. This is the second lesson we're gonna have about creating a strategy from the idea to the final functional strategy and bot to deploy on a prop firm. So in the last lesson, we talked about everything about on how to create a strategy. We talked about technicals, let's say. I mean, just we wrap around our head around the idea on why is it a good idea to code the strategy, and why is a good idea to use automation, build your own strategy, backtest a strategy, and then deploy it live on your prop firm. Today, we're gonna have the first step, and we're gonna start to put our hands in the mud and start creating something. Today, we start from the idea. So we're gonna go from the idea to the first working version today. So be careful, listen carefully, take some notes, and if you want, you will find this video recorded on YouTube on the YouTube channel of FunderPro. Ragazzi che mi state seguendo in italiano, la settimana scorsa abbiamo parlato appunto del perché è una buona idea sviluppare una strategia a partire da un'idea, svilupparla in codice, backtestarla e poi fare un deploy della strategia in maniera automatica, quindi creare un bot di trading automatico. Oggi cominciamo a mettere le mani in pasta. Questa lezione sarà completamente in inglese, quindi non vi preoccupate se non riuscite a seguire, perché sarà registrata, tradotta e disponibile sul mio canale YouTube, Michele Rossi Official, anche in italiano. So, welcome to the first chapter of this week. Today we're going to build the first working version of a trading strategy. Not just look at the chart and say, this could work. We are going to start with a market idea, turn that idea into precise rules, and give those rules to Codex. We're going to use ChatGPT. You can use Codex. You can use Cloud Code, whatever it works best for you. And we're going to use it to generate a Pine Script strategy. I know this is not the institutional way to do stuff, but we're working on prop firm, okay? We're not competing against institutions. That's not our job. We are working into a virtual environment. We're just looking at the real market. We're not actually intervening in the real market. So we're gonna go deep on this statement later on. But for now, so we're gonna code the strategy with ChatGPT. We're gonna have a Pine Script strategy. We're gonna add it to TradingView. We're gonna inspect the results and find the first problems and correct them. So by the end of this lesson, we will have a real baseline version of our strategy. It may be not profitable. It may not be robust. It will certainly not be ready to deploy yet, but it will be something that we can test, that we can measure and improve. And this is the first important step, because you cannot properly validate an idea that has never been defined before. You cannot optimize rules that keep changing. And you should never deploy a strategy that exists only as a vague concept in your head. Over the next 4 lessons, we will follow the complete process. Today, we move from the idea to the first functioning version. In the next lessons, we will validate the strategy using TradingView data. We will collect the complete list of trades and give that data to Codex. We will ask Codex to analyze the results and identify weaknesses, test different assumptions, and help us investigate whether the strategy has a real edge or whether the historical results is simply the product of overfitting. Again, we're not using all the in-depth level 3 data. Of course, we're using an entry-level data, which is TradingView. They have few tick data, not even the full history, but it's more than enough for us to start understand the concept on how to code a strategy, backtest the strategy automatically, optimize it, validate it, and deploy it. And you are going to be surprised on how much this could potentially be really, really profitable. Okay? We will also look at a Monte Carlo testing, in-sample and out-of-sample testing, and cross-validation. Finally, once we have a version that has survived the validation process, we will discuss deployment. At that point, we could convert the strategy into, if you wish, MQL5 for MetaTrader 5 or NinjaTrader with Python or C++, or we could leave the strategy on TradingView and use an external bridge to copy the signal to the account we choose. For this project, we are going to keep the strategy on TradingView, but first we need to build it correctly. All right, let's start and let's begin with the idea. The strategy we are going to use is the orb, is the most discussed and talked strategy of the last couple of years, but it's running around since the 80s, since the 70s, 1970s, 1980s. I don't know, but it exists from a long time. And you might think, okay, if it exists for this very long time, maybe we got alpha decay, the strategy is no more profitable. No, that's not the case, because we're not talking about a precise set of rules. We're talking about the overall concept, which is the opening range breakout. Around that, we can build multiple layers of filters, not too much to avoid overfitting, to find a little small new edge that we can use, if it exists, to pass the challenges and to make payouts. That's the idea. And I've already done that so many times. My students have already done that so many times. So can you. So the ORB stands for Opening Range Breakout. The name sounds complicated, but the basic idea is very simple. At the beginning of a trading session, we are going to define a range, right? For example, we can use the first 15 minutes after the New York market opens. So if you're in Italy, as I was for the last 40 years, the opening range is going to be between 3:30 to 3:45 p.m. GMT +2. Okay, this is the New York Stock Exchange opening, first 15 minutes, right? This is the opening range. And you're gonna have such a candle with its high, low, opening, and close. Let's say it's like this, OHCL. This is the low, this is the high, this is the opening, and this is the closing of the candle. Right. At the end of the 15-minute period, we have two important levels: the high of the opening range and the low of the opening range. After that, we wait. If price is going to closes above the opening range high, we look for a long trade. If price closes below the opening range, we're going to short and sell the price. That is the basic ORB concept, the orb. But now we need to ask the question that should always come before writing code. Why should this idea work? Why would the first 15 minutes of a trading session be important? The reason is that the market does not behave exactly the same way throughout the day. When an important session opens, activity often increases. There may have been news during the night. There may be orders waiting to be executed. There may be a difference between the price accepted during the overnight trading and the price accepted when the main market opens. Buyers and sellers begin to interact more aggressively. So the first few minutes can therefore create a kind of initial balance. The high range tells us where buyers stopped the market during that initial period. The low tells us where sellers stopped it. If price later breaks through one of those levels, the breakout may show that one side is becoming more aggressive. A close above the range may suggest that buyers are willing to continue paying higher prices. A close below the range may suggest that sellers are willing to continue accepting lower prices. That is the market hypothesis. And I want to be precise about the word hypothesis. We are not saying that orb works. We are not saying that every breakout continues. We are not saying that the strategy has an edge simply because the idea sounds logical. We are saying that the behavior is specific enough to investigate. That is the difference between an idea and a conclusion. An idea says, maybe the opening range contains useful information about the next part of the session. A conclusion says the historical data shows that the behavior creates a repeatable advantage after realistic costs. We are not at the conclusion yet. We just started. Today, we are only building the system that will allow us to investigate the idea properly. Let me show you how this can look on a real chart. Okay? Let me clean up the chart. So for this example, I'm going to use the 15-minute range. Let me go back. I'm going to cherry picking the idea, so it's going to be useful and clear for you. There it is. Let me go back. Let me find some good orb example. This can be one. There it goes. Beautiful. I know it's cherry picked, but this is educational, okay? I'm not going to cherry pick anything else, but I need to show you how the process works. So I'm going to use a 15-minute opening range on the New York session. There it is. This is 3:30. The market opened right here. So this is the first 5-minute candle. This one right here. 5 minute, 5 minute, 5 minute. We have our 15-minute range, right? We're gonna have the orb opening range high, and we're gonna have, we already have actually our open range low. The market and the exact ticker are important. If you use one trading view symbol and then you use another, we may not get the same prices, the same spread, or the same session data. So I'm going to use the exact symbol visible here. Okay, I'm using the micro and Q, micro E mini NASDAQ 100 index futures of CME, right? So you can do the same. Now, the session begin here. For the first 15 minutes, I'm not interested in taking any trades. 1, 2, 3, 15 minutes. 1, 2, 3, 5, 10, 15. I'm only measuring the market. During this period, the range is being created. This candle reaches the high, the highest price of the opening window. This candle reaches the lowest price. So at the end of the opening period, these two levels become our first range high and range low. From this point forward, the range should remain fixed. Now, look at what happens next. Price move above the range high. There it goes. And we have a closure. There it is. Let me go back one candle. There it is. Our opening range high. Sorry, I already have some of my bots installed here. So this is the first trigger candle. That is the type of event we are going to code. The important detail is that the entry is based on the close, not simply on a wick. So if we had a previous candle that wicked and closed back inside of the range, that is not an entry. This is one of the decisions that makes the strategy precise. If we don't define this, someone else could implement an intrabar entry and get completely different results. Now, let's use this number. We're gonna have our entry right here. We're gonna have our stop loss. Let's figure out we're gonna put it on the opposite range, so on the OR low. And we're gonna target a 1 to 2 risk to reward. We're risking 1 to target 2. We're risking 1% to make it 2%. And we have to be very careful and precise on what we are going to say to define our strategy. So the rules at the moment are very simple. Wait for the first 15-minute candle, mark up the high and the low of the range, and wait for a candle of 5 minutes closing above or below. We have our candle closing above. Right at the close, we open a buy order. We're gonna put our stop loss on the opposite range on the OR low, and we're gonna target a 1 to 2 risk to reward. These are the rules of the strategy. Okay? Of course, we also have to ask ourselves some follow-up question. Are we gonna enter on the same candle or on the next bar? Are we including commission? Are we including slippage? What happens if the breakout occurs 5 minutes before the session closes? What happens if price breaks both sides of the range? These are not secondary questions. Those are very important questions. We're going to ask these questions a little bit later. And this is also why most strategies found on the internet are not immediately useful. Often, they are presented as a visual ideas rather than a complete system. Someone shows us a chart and say, buy the breakout. But which breakout? The first breakout of the day, the breakout after a pullback, a breakout confirmed by volume, a breakout that closes above the level, and what happens after the ante? Where is the stop loss? Where is the target? When do we stop trading? If these questions are unanswered, the strategy cannot be reproduced. Another problem is that we usually see only the best examples, like we're doing right now, but for educational purposes. We see 3 winning trades on a shorts on TikTok or Instagram, but we do not see the losing trades. We do not know whether the performance includes commissions and slippage and perhaps spreads if you're on CFD especially. We do not know if the strategy is using future information, and sometimes the strategy has been optimized so many times that it works only because it has been fitted to one particular historical period. A real edge is not a magical indicator. Is not a win rate, is not a beautiful equity curve. An edge is a repeatable statistical advantage. A strategy can win 40% of its trades and still be profitable if its winning trades are sufficiently larger than its losing trades. A strategy can win 80% of its trades and still lose money if the occasional losses are too large. So we need to study the complete distribution of results. We need to look at average trade, profit factor, drawdown, losing streak, and performance across different periods. But before any of that, we need a strategy that is stable enough to test. Now, I'm going to write the technical specification. I'm doing this before asking Codex to write the code. We're doing together, don't worry. This is important. Codex can write Pine Script very quickly, as well as Cloud Code or any other AI, but it cannot read my mind. If I give it a vague idea, it must make assumptions. And if those assumptions remain hidden, I may end up testing rules that I never intended to create. So I'm going to write the specification directly here so you can see and you can try and do the same. I don't like the red. Let me use the blue. No, it's not visible. Let me use yellow. Let's go with the yellow. There it goes. So, the first part is the market. I will write. We are using the selected trading view symbol, right? This is the first thing we have to say, Codex. What symbol are we using at the moment? Right, MNQ. So we're going to use MNQ, right? But of course, we can use the same. We want to be able to use the strategy on different chart and test it on different scenario. Maybe you want to use it on YM, which is the Dow Jones. You might want to use it on ES, which is the S&P 500. So we are using the selected trading view symbol. Means that whatever symbol we are using the strategy, whatever chart we are using the strategy on, TradingView is gonna test the strategy on that symbol. The ticker must not be hard coded. This means the script should work with the symbol displayed on the chart. This is simple. The second part is the session. The strategy uses the New York session and the America New York time. Sorry, let me go. Time zone, right? You can use the Italy time zone. You can use the India time zone. You can use Japan time zone. But we're going to use the New York session. We're going to trade in the New York session. I'm deliberately specifying the time zone. I do not want the strategy to use the time zone of my computer or whatever time zone happens to be selected on the chart. The third part is the opening range. This is also very important for MetaTrader, but we're going to talk in another time. The range begins at 9:30 a.m. New York time and ends at 9:45 a.m. During those 15 minutes, the strategy records the highest and the lowest low. So the highest high and the lowest low. No trade is allowed while the range is forming. Once the range is complete, the levels are fixed. Okay? Now, the fourth part is the entry, right? We need to tell when to enter long and when to enter short. So, a long signal occurs only when a confirmed candle closes above the range high, while for a short signal, a short signal occurs only when a confirmed candle closes below the range low, right? Only one entry is allowed per session. If the first trade, let me dictate, so I'm gonna go faster. If the first trade is long, we do not later open a short trade on the same day. Oh, it's not working. Let me write it down. If the first trade is long, we do not later open a short trade on the same day. Same apply for the short. If the first trade is short, we do not later open a long trade on the same day. Just to be sure, we're hard coding every property, every rule, every idea, everything that can mess up with the logic of the strategy. So the sixth part is the stop. For a long trade, let me see if we can do this. Right, we can do this. I can dictate now. Okay. For a long trade, the stop goes at the opening range low. It works. For a short trade, the stop goes at the opening range high. Right. Then, let me stop the, right. Then the seventh part is the target. So what are we gonna say is we use a configurable risk to reward ratio with the default value of 2. Perfect. Wizard Pro is crazy good. I need to remember to stop and restart. Then the target must be calculated from the actual entry price and the initial stop distance. Right. Then the eighth part is the session exit. Any open position is closed at the end of the session. There is no overnight holding. It is, let me go a little bit smaller. And the ninth part is position size. For the first version, we will use a configurable quantity. We are not trying to solve the entire portfolio and risk management problem here. There it goes. So we are trying to create a clean baseline. The final part is the visual behavior. So we need to tell the script to show, because we want to see, we can do it. So we want to also be able to see. The script must show the range high and low. It must shade the opening range area. It must mark entries. It must show the active stop and target. That way we can compare what the code does with what the rules say it should do. Come on, Whisperflow, please. Don't abandon me. There it goes. So this is our complete first specification. It is simple, but it's precise. Now I'm going to turn that specification into the prompt I will use with Codex. I want to show you the exact process because the prompt is part of the development workflow. I'm not going to describe the prompt afterwards. I'm going to write it, send it, and use the results, okay? So I already have this prepared. I'm gonna copy and paste it inside of Codex. So let me open up Codex. There it is. There it goes. Right. I'm gonna use 5.6 sol or whatever you have. I'm gonna paste this whole code. Let me write it to you. Let me read it to you guys. Okay? So it's very simple and you can copy paste. You are an experienced Pine Script developer and systematic trading researcher. Create a trading view strategy in Pine Script version 6 based on the following specification. And these are the specification. Use the trading view symbol selected by the user. Do not hardcode a ticker. Do use American New York at the session time zone. Do not use the computer's local time zone or the chart's time zone. The trading session begins at 9:30 New York time. The opening range lasts for 15 minutes and ends 9:45 New York time. During the opening range, record the highest high, record the highest low. Do not open any trade. After the opening range is complete, enter long only after a confirmed candle closes above the opening range high. Enter short only after a confirmed candle closes below the opening range low. Allow only one entry per session. Do not reverse the position during the same session. For a long trade, place the stop loss at the opening range low. Calculate the profit target using a configurable risk to reward ratio. For a short trade, place the stop loss at the opening range high. Calculate the profit target using the same configurable risk to reward ratio. Use a default risk to reward ratio of 2.0. Close any open position at the session end. Do not hold positions overnight. Create inputs for session start time, sessions end time, opening range duration, risk to reward ratio, position size, commission, slippage. Visual requirement: plot the opening range high and low, shade the opening range area, plot the active stop loss and target. Mark long and short entries. Include an optional debug mode. Technical requirements: use confirm bar data. Avoid look-ahead bias. Reset all daily and session variables correctly. Make the code readable. Add commands explaining the session logic and trade logic. Include alerts for long entries, short entries, stop losses, target, and session close. Before providing the code, explain the main assumption and execution model, then provide the complete Pine script, right? Here we go. So this is it. Is that everything clear? Do you guys have any questions about it? Please let me know in the chat. Beautiful. Beautiful. Right. Okay, cool. Let's send it to Codex. And wait. So while the code is being generated by Codex, notice what we are doing. We are not asking Codex to find a profitable strategy. We are not asking it to optimize the parameters. We are not asking it to add indicators until the equity curve looks good. We are asking it to implement a clearly defined hypothesis. That distinction is extremely important. If we ask Codex to make the strategy profitable, it may change the rules and filters or optimize parameters before we even understand the baseline. So for now, we need a faithful implementation, right? We need to wait. It's going to take a little bit of time. So if you have questions, this is a very good moment to ask. Or we're just going to wait. Assumptions and execution models. Right, here it comes. Codex is writing the code based on my hypothesis. It's going to be ready very soon, and we're going to test it in the chart. If you want the full code, I mean the prompt to generate the code, just follow me on Instagram, Michele Rossi Official, and ask. Or you follow and subscribe to my YouTube channel and you comment by asking. That it is ready. It didn't take more than 5 minutes, right? Now, before copying it into TradingView, I'm going to ask Codex to explain the most important parts. So I'm gonna ask this very prompt. I'm gonna ask this. Review the script you just created. Do not rewrite the code yet. Explain how the session is detected, how the opening range begins and ends, how the high and lows are stored, etc., 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 etc. Identify any possible bug or ambiguity, right? This review is very useful because it forces us to understand the code before trusting it. So if Codex says that the range is being calculated using future bars, we know there is a problem. If it says that entries are generated intrabar, that does not match our specification. If it says that the strategy can reopen a trade after the first one closes, we know the session's lock is incomplete. The explanation is not a substitute for testing, but it helps us know what to look for on the chart, right? Let's see. As you can see, is automatically fixing, reviewing possible bugs and ambiguities, possible duplicate exit alerts, and it's gonna fix the code by itself. So just be aware that we might have a partially working code. It might not be completed. So if it's not working on the first trial, you just keep on asking Codex to fix, because TradingView is gonna give you what's not working, and you gotta go back and forth maybe a few times. I'm not gonna do this right now. Okay. Now we're asking, now write the final fixed code ready to copy and paste into TradingView. So I'm gonna fix it later if it's not working right now. I'm gonna just show you a version that is already done by me. It's very similar, but with more complex rules, more advanced rules, just to show you guys. Let's see. Here it comes. We're gonna create a new strategy. And we're going to copy and paste the code inside of TradingView. We're gonna save with the name, save script, New York opening range breakout, FunderPro. Save. And we're gonna add it to the chart. Now, as it's compiling, it might find some errors. Like, as you can see, it just found an error. I'm gonna go back to Codex, give it the error, and ask it to fix it and give us back the full code. Now, For the purposes of this live, we're gonna have the full code. I'm gonna show it to you the next time. I don't wanna waste your time right now. Okay, write the full final code fixed. Let me see if it can make it within the end. But you're gonna find something that look like this. This is one of the orb strategy that I coded, and it's going to detect the exact range. It's gonna place your stop loss, your entry point, and your take profit. And most importantly, it's going to give you some reports such as key stats like total profit and loss into the last April, July. So it's 3 months, risking 1% per trade. It makes 3.51 with a 3.28 drawdown, 58% profitable trades, profit factor 1.2, and a lot of key metrics. Okay. And we're going to talk about all of this in detail in the next sessions, as well as every trades taken. Taking in consideration the best set of historical data, which is more or less 40 ticks per bar with high definition, is gonna execute the script on the bar close. I added some commission, 0.25 per contract. I added 2 ticks of slippage. I added 1 tick of extra order execution delay, which it's very similar to what happens in reality, as well as inputs area where you can put all your data. So you're gonna find yourself into something that looks like this, and you can go back in time and backtest more. It's gonna take more time. After that, we're gonna do some optimization, some validation, and then deploy it live. Let me see if it fixed the code in the meantime. If not, no worries. We're gonna do it offline. No variables alternative on character. Use the block copy button. Let me try it again. Let me try it again. I believe it's just this first. There it goes. Should work. There it goes. Just added a few more. Here it is. Our opening range script is now ready. As you can see, okay, we have a problem with impagination. Okay, this should move. This should stay fixed into the chart, but no problem. We can fix that very easily. We have our session start time. We have our session end time. We have our opening range duration, risk to reward, position size in contracts, and debug mode to fix everything else. We can choose the sites. We can use these. We can use these. For example, commission 0.25 per contract, and 1 tick more, execution delay 1 tick, 1 tick of slippage. There it goes. Let's see. And you're gonna have your report. Okay, this is not looking good, but we're gonna work on that with optimization. Okay, we can go even for 355, and it's gonna do exactly. It's gonna tell you exactly what to do and when to do it. Okay, so we're gonna fix it. No worries, we're gonna fix it, and it's gonna look much better, something like this. But you just saw how, starting from an idea and hypothesis, we define the orb using the exact rules, right? Then we created a detailed prompt for Codex that you can use for any other hypothesis you might have. We used Codex to generate the Pine script. We copied the script into TradingView. We inspected the trading range, the entries, the stop loss, the target, and the session behavior. And we also looked how to debug a problem without asking Codex to rewrite everything from scratch. Just giving back the errors or what we're seeing right now. I'm gonna say, okay, the range stays stuck in the chart, is not moving with the candles. Please fix it. We can also provide some screenshot, okay? And this is the process that we will continue throughout this project. The first version is not supposed to answer every question. It is supposed to create a reliable starting point. Now we have a baseline that can generate a list of trades. And that list of trades is what we need for the next lesson. Because the next question is no longer, can we code this idea? The next question is, does this idea still make sense when we analyze the evidence? That is where real research begins. Thank you guys for being here with me today. You can find the full video into FunderPro YouTube channel and on Michele Rossi Official, which is my channel. You can find the name right there. And you're gonna find it also in Italian. Ragazzi, troverete questo video completo sul mio canale YouTube in italiano e sul canale di FunderPro in inglese. Vi ricordo inoltre che avete e potete usare il codice live che trovate qua o qua sopra o qua sotto, non lo so, dipende da dove state guardando, per ottenere il 20% di sconto su qualsiasi conto, challenge, instant, futures di FunderPro. Vi ringrazio di nuovo, ringrazio FunderPro e ci vediamo lunedì mattina, mercoledì mattina per parlare di analisi fondamentale, intermarket, sentiment e tecnica e prepararci alle sessioni di trading della settimana, e il venerdì mattina dove parliamo di trading automatizzato, quant trading, trading algoritmico, bot. Ragazzi, grazie a tutti, thank you so much, have a great day and see you soon. Bye.